All right, let's start off the program, and I seem like I'm repeating myself every week. The big story in the country, in the world, in finance is inflation. I mean, let's face it, it's affecting all of us. There's nothing else really worth talking about in the financial markets but inflation. And this week it was announced that the consumer price index rose 8.6% year over year, the highest number we've seen in over 40 years. And that's the theme we're hearing. We haven't seen inflation like this since 1980. And it's going to get worse before it gets better, my friends. You know, the big narrative in the financial press and in CNBC and all these places was that inflation is peaking. And then once we have peak inflation, it'll start going down and everything will be fine and dandy. And that's not the case. We have not saw peak inflation yet. I'm thinking that 8.6% is going to sound nice. It's going to sound comfortable compared to the numbers we're going to see in the future. We are living in the most inflationary times that this country has seen. And I think it's going to get a lot worse before it gets better. And it's not just the United States. It's happening all over the world. So the market was surprised by it. I don't know why, because, the CPI has been worse. There's only been 2 months in the last 2 years where the CPI came in less than expected. And the CPI has risen for 14 straight months. Oh, by the way, Biden has been president for the last 16. So the Biden presidency is the Biden inflation presidency. And I've been warning you for many, many years that the policies of the Federal Reserve, our deficit spending, was going to wind up in this inflationary spiral that we find ourselves. Now, I thought it was going to happen a lot quicker than it did. I thought we were going to be in that inflationary spiral 5 years ago. But that just delayed it. It just allowed for more money printing, more stimulus due to the pandemic, and here we have inflation like the country has never seen before. I was driving in today, and like everybody else, we look at the signs at the gas stations to find out what the price of gasoline is. On the Parkway today, I saw $5.13. The local Wawa, which is probably more accurate, the Parkway is always more expensive, $4.99.9. What's with the 9/10 of a penny? You think they're going to get away? What do you think? All right, so it's $4.99 and 9/10 of a penny. It's not $5. That's like a psychological thing, right? I guess it works because in retailing, it's been going on forever. You're going to sell your house, right? It's $349.9. It's not going to be $350 I'm selling my house for. It's in the 340s. So it's a psychological thing. 9/10 of a penny. What's a penny worth these days that we need 9/10 of one? Anyway. So the biggest jump in inflation were in shelter, meaning rental properties, real estate, energy. The energy index rose 4% month over month, although it's, in 1 month we've had like a 65-cent increase in gasoline prices. I mean, think about that. I mean, that's 12% right there. So I don't know where they come in saying that the energy index rose 3.9% month over month in May. But we have energy, we have food, and we have shelter. Not that any of us need any of that stuff, right? I mean, we don't need shelter, we don't need food, we don't need energy. And that's what's funny. They look at the core rate of inflation. They take out food and energy. Okay, all right, let's take food and energy. It's still high. And the problem with energy being the driver of inflation, it affects everything. Energy goes into shipping. Energy goes into airplane fares. Energy goes into manufacturing. Energy goes into going to work every day. So when you have energy prices soaring, it flows through to everything else in the economy. Now, we're starting to see now energy surcharges on everything, right? My UPS bill now every week has $12 in energy surplus or energy charge. We're even seeing in restaurants now they're having energy or inflation surcharges. So who pays for this? Well, obviously we all do. And it's amazing. We've gone so many years without a big inflation problem, which really was kind of perplexing to me because of all the money printing that we've done over the years, all the deficit spending. I was early. And the fact that it's so pent up and so delayed means that this inflationary spike is not going away anytime soon. Now, the Federal Reserve has been raising interest rates. They meet next week. It's a guarantee that they're going to raise interest rates at least 0.5%, and they'll probably do the same thing in July. But after that inflation number came out Friday, there's even some banks that are out there saying they may even go 0.75%. It's still not going to make a difference. You can't battle inflation with interest rates if interest rates are below the inflation rate. It's just a show. So what's the inflation rate? Officially, it's 8.6%. Now, economists are out there who know how inflation used to be calculated back in 1980, say double it. If you calculate inflation the way we did it back in 1980, the late 70s, you could double it. You're looking at 17, 18% inflation right now, some of the highest inflation we've ever seen in the United States. And in 1980, the Federal Reserve, led by Paul Volcker, raised interest rates to 17% to match the inflation rate. And he was very successful in killing inflation. He was very successful in killing the economy, too. We went into a major recession, but that's the way you quell inflation, through declining demand destruction. What do I mean by that? Well, if prices go too high or interest rates go too high and it's too expensive to finance the purchase of a home or a car or whatever, people stop spending. It gets to the point of where, you just can't afford it, so you don't buy it. That takes the demand down, supply goes up, prices go down. Now, we're starting to see demand destruction in the economy right now, especially in housing prices. I mean, mortgage rates right now are 5.25%. That's having a terrible effect on housing. It wasn't long ago, it was 3.5%. Well, the difference of 2% makes a big difference in the budget of somebody trying to buy a house. So 2% on $100,000 of mortgage debt is $2,000. So the average mortgage, say, is $300,000. That's $6,000 more a year in interest expense. That's $500 a month. And with housing prices so inflated, people are getting bigger mortgages to buy these homes. They can't afford it. And we're seeing mortgage applications dropped hugely. It's one of the biggest drops in 22 years. Of course the mortgage applications are dropping. Nobody's refinancing their home. That door closed. And people can't afford homes anymore. So now, demand destruction. Interest rates go up. Costs go up. All right, I'm not going to go out and buy a home. Now prices come down. Another way demand gets destructed is by crashing the economy. And the economy's crashing all around us, my friends. And we'll detail that as we go in the program here. But the fact is that the Fed is trying to destroy the economy to try to destroy inflation. But you're going to kill, the body, which is the economy, to do it. And I don't think the Fed has the stomach for it. Here we are in a big midterm election. The Fed's raising interest rates. That's not good for the current party in power, because it affects everybody. Grocery prices continue to soar in May. Americans are paying significantly more for, a category that's crucial for their survival, which is food. And you know, that's why you can't believe these inflation numbers, because they're too low. I got a chart in front of me here that shows inflation on certain things. I mean, gasoline and airfare are up like 30-something%. Gasoline's up more than that. It's up 100%. What are you talking about here? Basic transportation up 19.4%. Hotel rooms year over year up 19.3%. Energy for our homes, electricity, natural gas up 19%. Used cars up 16.1%. Furniture up 13%. New cars up 12.6%. Groceries, food up 12%. But overall inflation is only up 8.6%. Now, it's in the government's best interest to fudge the inflation figure. So when you're hearing the highest inflation of 40 years, double it. And the next thing is going to be shortages. I'm telling you, people, I've been warning you, trust me on this. Come the fall into the winter, you are going to see shortages across the board in almost everything. All right, I got some articles here. Avocado prices hit fresh record high amid supply side factors. So a 20-pound box of avocados from Mexico has risen from $20 to now $50. This year, up 150%. You like your guacamole? Well, you're paying up for it now. Avocado prices have been exacerbated by supply-side factors such as an increase in fertilizer prices. Remember we were talking about that, right? There's shortages of fertilizer, and when you can get it, it's 300% up from a year ago. There's some little secret about farming. You need fertilizer. And farmers are complaining right now that there's a fertilizer shortage, and if they can get it, it costs so much that their cost of production, the cost of farming has gone up so much that in some cases that it's unaffordable for them to make things. Again, there's two issues here: the price of things and the availability of things. Prices are one thing, but you can still get them. You know, if you got to pay more, you pay more, but you can still get it. Sooner or later, we're not going to be able to get certain things at any price. Now, there's nothing sacred here. Now there's a sriracha sauce shortage. Yeah, that's it. If you like sriracha, the company that produces it, Hai Fung Foods, has been forced to suspend sales and production of the sauce. It's facing a severe shortage of chili peppers. Due to weather conditions affecting the quality of chili peppers, we now face a more severe shortage of chili. Unfortunately, this is out of our control, and without the essential ingredient, we're unable to produce any of our products. Why is there a chili shortage? Again, availability of fertilizer, and so forth. What has the world come to when you can't get this? Avian flu. This is another thing here that's affecting inflation on certain things. Has killed 40 million turkeys in the United States. Now, Hormel Foods produces products called Jenny O. I buy Jenny O products. I like turkey bacon. Right? They said sales are going to fall as much as 30% in the second half of this year because they're unable to get enough birds to meet demand. Turkey breast meat is now about $6 a pound. Feed prices are up, with cornmeal and soybean meal costing 40% and 120% more respectively than a year ago. So you got prices to feed these birds going up, and you have avian flu, the worst we've seen in many, many years. 36 states have avian flu, and it's killing off chickens and turkeys. It's affecting egg prices. Eggs are up 32% for the year. $5 sometimes for a dozen eggs right now. More shortages. We had shortages of baby formula. Nobody ever thought we'd see that. Well, if you're a woman out there, maybe you want to start identifying as a man because tampon shortages hit consumers amid high inflation. How do you have a tampon shortage? Where did that come from? Maybe it's because of all the men identifying as women that now need tampons. So they doubled the demand, I guess. In a recent statement, Procter & Gamble, the company that makes tampons, and Always pads, said some consumers at the moment might be unable to find what they need. But they described the problem as only temporary. Yeah, just like inflation is only transitory, remember? The Tampax team is producing tampons 24/7 to meet increased demand for our products. How could it be increased demand? I mean, there's only a certain number of women that would need that. How does demand go up with something like tampons? Come on, help me here, Paul. How are you going to increase demand? Oh, God. It's all the gender bending thing I think is going on here. I don't know. They go on to say, we're working with our retail partners to maximize availability. Baby formula, now a tampon shortage. If you're a woman, Biden has a war on women going on right now, I think. Not only that, if you can get it, the cost of tampons are up 10% over the past year. Why? Because of the cost of electricity and cotton and everything else. Inflation everywhere. Unbelievable. But the worst is yet to come. All right? Like I told you earlier, there's going to be shortages of everything. And if you can get it, it's going to be through the roof cost. And inflation is not peaking. It's going to get worse. And the Federal Reserve has the false narrative that they're going to be able to quell inflation by rising interest rates. And there's no way that by the Fed raising the federal funds rate, it's going to do anything to inflation. And sooner or later, what the Fed's going to do is they're going to back off because economic contraction and market volatility is going to rule the day. And they're going to back off like they always do. What else came out this week? New poll finds most Americans believe the Biden administration is intentionally letting gas prices rise. Well, it seems like it, doesn't it? And for any politician or for any party that's in power, the only thing worse than the economic pain that people are experiencing is people believing that the pain is being inflicted intentionally on them. And when it comes to gas prices, that's exactly where the Biden administration is right now. And most voters believe that the Biden administration is allowing gas prices to rise to force Americans to use less fossil fuel. 53% said yes, they believe the Biden administration is allowing it to happen purposely to force Americans to use less fossil fuel. Now, of course, Republicans, 77.3% believe it. 56.5% of independents believe it. But most Democrats, 68.7%, disagree. Don't believe the administration is doing it on purpose. Well, maybe the reason why people believe this is because members of the Biden administration keep coming right out and saying it. Pete Buttigieg said, to support the transition to electric vehicles, we must build a national charging network that makes finding a charge as easy as filling up at a gas station. He said that last week. In the Senate hearing, Biden Treasury Secretary Janet Yellen. Now this woman is responsible for the inflation. She was the head of the Federal Reserve for years that they were doing quantitative easing and money printing. She was the last Federal Reserve chairman, and now she's the Treasury Secretary. She says the critical thing is we become more dependent on the wind and the sun. So they're pushing this on us. You know, everybody in this cabinet is so radical and so nuts and such a lunatic. Biden's energy secretary said, we're working through an energy transition. The reality is we have to take some time to get off oil and gas. We recognize this. This is a transition. And Joe Biden said when it comes to gas prices, we're going through an incredible transition. Well, you can't blame people for thinking it's intentional when the administration comes right out and tells you. So how did this inflation come about? People are asking, what happened? What's going on here? Well, it happens, the definition of inflation is an increase in the money supply. That's it. Well, I'm looking at a chart from the Federal Reserve. You want to see an increase in the money supply going straight up over the last couple of years? To stimulus creation and all these payments? Where do you think the money came from? It came from the Federal Reserve, who was printing it. Now, Jerome Powell, who is now the chairman of the Federal Reserve after Janet Yellen, he was recently before Congress, and he laid it out. He said how inflation is created, how money is created. And I thought it was quite amazing because there was honesty you don't usually hear.
To say you simply flooded the system with money. Yes, we did. That's another way to think about it. We did. Where does it come from? Do you just print it? We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that to the Federal Reserve banks.
So here he is telling you, basically, this is how the inflation has come about. And this is how inflation always comes about. A government makes too many promises to its citizens in the ways of entitlements and so forth, start spending more money than they take in, have a budget deficit and a trade deficit, doesn't produce anything anymore, and then the Federal Reserve has to step in and fund that deficit, that debt that the government's incurring by printing money. That printed money goes into the economy, chases all the goods, and bids them up. It's textbook inflation. That's the way inflation happens. Price increases is the symptom of inflation. Inflation is an increase in money supply. And like I said, if you're looking at the chart I'm looking at right here, it's radio, I can't show it to you. It's straight up the money supply. You know, the stimulus bill that Biden passed, as soon as he was president, it was $2 trillion. That $2 trillion is sloshing all over the economy right now, pushing prices up. It's one of the factors. It's almost a perfect storm for price increases, but that's the main factor. And Jerome Powell just laid it out to you. Yeah, we print money. Yeah, we flooded the system. Yeah, we did it. Like it's nothing. He didn't really care. Try to reverse that, it's almost impossible. Now, on Friday also, a number came out. I mean, all the numbers coming out now are terrible for the economy. The economy is collapsing. Maybe that's what will quell inflation. Again, demand destruction. Everybody's so poor they can't buy anything. People start losing their jobs as we enter a recession. Trust me, we're in a recession now. Later this year, they're going to say the recession started in the spring of 2022. They're always so far behind. In a stunning miss, University of Michigan's sentiment collapsed in preliminary June data, crashing from 58.4 to 50.2. Well, economists expected the number to be 58.1. It came out at 50.2. A record low, the lowest reading ever for the University of Michigan sentiment. Throughout the survey, consumers signaled strong concerns that inflation will continue to erode their incomes, and the factors they cited are unlikely to abate soon. While consumer spending has remained robust so far, the broad deterioration of sentiment may lead them to cut back on spending and thereby slow down economic growth. But don't worry about it because, the U.S. Treasury and the Fed is on it. They're dealing with it. Janet Yellen came out in her testimony recently and said, it's amazing how pessimistic households are given job gains. Maybe we need to give them more stimulus to cheer them up. Maybe that's what we need to get sentiment happy in the country again. Let's start printing checks again. Consumers' assessments of their personal financial situation worsened about 20%. 46% of consumers attributed their negative views to inflation. This share has only been exceeded once since 1981 during the Great Recession. Overall, gas prices weighed heavily on consumers. No surprise, given that it went up 65 cents a gallon in the last month. So why is this important? Because consumer sentiment affects consumer sales. And the consumer is 70% of the economy. So if consumers are really pessimistic about the economy and their futures, they're going to start cutting back on spending. And that will throw us into a recession or worse. And now, of course, I played it for you last week. Last week, Joe Biden insisted that more Americans feel financially comfortable since he took office, and that Americans have higher savings and less debt. We're going to talk about a lie. This guy lied about inflation and everything he said in that speech. According to a new poll, 83% of Americans are pessimistic about the U.S. economy, describing it as poor or not so good. 35% say they aren't satisfied with their financial situation. The highest level of dissatisfaction in the 50 years since the Wall Street Journal poll began. The survey found Americans in a sour mood and registering some of the highest levels of economic dissatisfaction in years. The pessimism extended beyond the current economy to include doubts about the nation's political system, its role as a global leader, and its ability to help most people achieve an American dream. Americans also view the nation as sharply divided over the most important values. And only 27% say they have a good chance of improving their standard of living. That's terrible. Only 27% of Americans believe they can improve their standard of living right now. 38% said their financial situation had gotten worse in the past few years. It's terrible. People are just so pessimistic about everything. 60% said they're pessimistic about the ability for most people to achieve the American dream. So what's driving this inflation? Of course, that's the big deal. And Democrats are going to pay the price at the ballot box in November. I mean, it's going to be a bloodbath for them. A survey of corporate financial officers found that 100% of them expect a recession to start in the months ahead. 100%. You don't see that too often. Have you ever heard a survey where 100% of the respondents agree? I can't ever recall seeing that. 100% of corporate chief financial officers that were surveyed by CNBC believe that a recession is coming by the end of next year. It's here now. What are you talking about next year? At this point, our economic troubles are growing so rapidly, you have to be deaf, dumb, and blind not to see what's happening here. These are the executives that run companies. They know, they could see it. Just in every aspect of our life. Last week, jobless claims shot up to the highest level in almost 6 months as Americans are starting to file for unemployment again. Why? Because the economy is starting to slow again. People are starting to become laid off. Boy. It's just amazing. You go shopping, grocery shopping, you fill that shopping cart, you're looking at $300. It's just amazing. All right, financial markets did not react well this week to the economic news that came out. We have the worst start in financial markets ever in the history of financial markets. How about that? When that CPI number came out on Friday, markets turned south really quick. On Friday, the Dow was down almost 900 points, down 4.58% for the week. For the year, the Dow is down almost 14% in the first 5 months of the year. And that's the best of all the stock market averages. Oh, by the way, the Dow was down 600 and change on Thursday. So we had almost a 1,500 point decline in 2 days. The S&P 500 down 5% for the week, down 18.6% for the year. And the worst index of all is the NASDAQ. That has all the big tech companies in it. Down 4.6% for the week, down a whopping 25% for the year. Worst start of the year ever for financial markets. Not surprising. You got rising interest rates, rising inflation, political instability, geopolitical instability, soon food shortages, supply chain problems, and rising interest rates. The 10-year Treasury yield went up big this week, up to 3.16%. The 2-year Treasury, for the first time in decades, is over 3%. Gas over $5. Mortgage rates 5.25% for a 30-year fixed mortgage. Oil prices closed on Friday at $120.50 a barrel. Now, that's one of the first things I look at in the morning. When I get up and I turn on my computer to get updated on what's happening in world financial markets, the first thing I look at is oil prices. Because, again, energy drives everything. And the second thing I look at is the yield on a 10-year Treasury bond, because that drives mortgage rates and everything else. That's all you really need to know. Everything else can flow from that. If bond yields are up, stock market's probably going to be down. And who's paying the price for inflation? As always, it's the people on the low end of the income spectrum. You know, rich people, we're seeing news out of companies like Tiffany and high-end retailers. They're doing just fine. Their earnings are good, their sales are good. But when we look at where low-income shoppers go, we're seeing big problems. Whether it's Walmart, whether it's Kohl's, Target, people are pulling back. Nordstrom, Ralph Lauren, they're doing well. They had stronger than expected sales. Walmart customers are switching to cheaper lunch meats and half gallons of milk instead of full gallons. Kohl's said its customers were spending less on each visit. The Gap slashed its annual financial outlook. You know who's doing well? Dollar Tree and Dollar General. People are going, where can I buy something cheap? And they tend to do well during difficult economic times. That's when people, cut back and look for a cheaper way to get by. The quality of the stuff is so bad. It all comes from China. God knows what's in that stuff. I pray to God I'll never have to go to a dollar store to live. Another issue you have here, if the stock market continues to weaken, you're going to have what's called the wealth effect, where people feel poor and won't go out and buy stuff and travel and do things. And trust me, this stock market has a long way to go to the downside. People have no idea what's ahead of them in the stock market. And I've been warning you for months here. If you have too much in the stock market, you got to reevaluate it while you still can. Food banks are struggling to keep pace with the increased demand. Here's an example. At the Northern Illinois Food Bank, which feeds people in 13 counties, The average monthly number of visits grew to more than 400,000 in February through April, up from 311,000 in July through the September period last year. For the Northern Illinois Food Bank, like many food banks, food costs are spiking amid dwindling donations. Inflation and rising food costs mean the food bank has to make tough choices about our budget. So food banks are having it tough. If you're well-heeled and you're doing okay in this economy, if you can help a local food bank, by all means do it. Because demand for their services is rising. And what's really sad, a lot of people that go to food banks these days work for a living. They just can't make enough to keep pace with inflation. And food banks are really struggling to keep up with demand. So like I said, one of the best things you could do if you're a charitable person and you have the ability to do it, is to give some money to a local food bank. So the talk coming around now in financial markets is stagflation, a stagnant economy while prices are going up. I think that's absolutely the wrong term to use for what we're going through. It's not stagflation, because stagflation means the economy just isn't doing anything. When in fact, the economy is crashing. That's not stagflation. That's inflation with a crashing economy. That's a lot worse than stagflation. But that's the thing that you're hearing all over the place. Oh, we may have a stagflation, the worst situation. No, that's not the worst situation. Worst situation is inflation and recession or depression. And Americans are so gloomy right now when it comes to their finances, it's a shame. They're pessimistic about everything. And when you're in a public profession like myself, I see the public. They come into me and just to listen to them. And it's unanimous. Everybody's like, what's happening in our country? Everybody's so pessimistic. Another thing we have with inflation is shrinkflation. We're all seeing that too. Downsizing products. Here's some examples. Honey Bunches of Oats, the cereal, which has seen the weight of its standard box, previously 14.5 ounces, now it's only 12 ounces. A reduction of 17%. Price is still the same. Again, they think they're putting one over on us. Angel Soft Toilet Paper has reduced its size from 425 sheets per roll to 320. Bounty paper towels have cut their rolls from 165 sheets to 147. Gatorade cut its bottle size from 32 ounces to 28 ounces. Do they actually believe we will not notice that the packages have changed? You open up a bag of potato chips, it's half air. Oh, where's the potato chips? You got to put your arm up to your elbow to get that where the potato chips are. And this is taking place all over the globe. It's not just here. A small box of Kleenex now has 60 tissues. A few months ago, it had 65. It goes on and on and on. So our standard of living is falling with each passing day. The process is only going to accelerate during the second half of the year. We have shortages of everything coming, including food. And I hate to be the bearer of bad news, my friends, but you better prepare yourself. Because a nightmare scenario is unfolding before us. And as I say every week on this program, the best thing you could do with your money right now is buy food. Buy non-perishable food. In the worst case scenario, you won't be able to get it. And in the best case scenario, it's going to cost a lot more than it does today. So inflation, a big story. It's something we're going to talk about every week here because this is what's affecting Americans more than anything else. Nobody cares about anything else. Nobody cares about January 6th, the hearings. Nobody cares about any of that. All they care about is how they're going to get through the day, how they're going to get food for their family and fill up their cars and get to work. Tough times in America, tough times in the world. Let's take a break. You want to be part of the program? Got a financial question, 237-9626, 732. 237-9626. My name's Lou Scatigna. You're listening to The Financial Physician. Don't go away.